Well, hi there. My name is Jason Ayers, CEO of the Croft Financial Group and a member of the Investment Review Committee. On behalf of the committee, thank you for taking the time to watch our Portfolio Manager's Brief for December 2020. Well, both Canadian and U.S. stock markets experienced some wild swings throughout the remainder of October and into November ahead of the U.S. elections, as investors hoped for the best but anticipated the worst for the election outcome. Now, although still contested by soon-to-be former President Trump, as the chart illustrates, the Biden win was a clear catalyst for the markets to continue their upward trajectory, with both the S&P 500 and the NASDAQ extending well beyond the pre-pandemic highs. While Canada's TSX continues to fall just short of that high year to date, considering the circumstances, the resilience of both the US and the Canadian stock markets has been historic, to say the least. That said, let's not forget that this year's fastest market recovery in history didn't just happen on its own. Thanks to the financial engineering of our central bankers, the unprecedented fiscal and monetary stimulus injected into the system has certainly gone a long way to support asset prices and liquidity. And the support in Canada continues to come as the Canadian government has just unveiled what is being called the largest economic stimulus package since World War II. And as referenced in our latest research update found on the croftgroup.com website, there's Tina. There's no alternative. With ultra-low interest rates, which should remain in place for the foreseeable future, low-yielding bonds will remain unattractive, and investors should continue to move into equities in search of a real return. And again, as referenced in our latest post, one could argue that the main risk to a recovery in 2021 will be inflation, which would suppress bond prices, making fixed income investments potentially the highest risk asset class in the current outlook. However, investors mustn't lose sight that significant uncertainty remains. Some segments of the economy will take a long time to recover as the world continues to deal with the waves of COVID-19 outbreaks, the subsequent lockdowns, and some real clarity as to when and how vaccines can be expected and how successful they will be. Meanwhile, there will continue to be winners and losers when it comes to specific sectors, and we can also expect some rotation to take place as value stocks become more attractive as we move closer to some sense of normalcy. Now, to circle back on the U.S. election results for a moment, it was clear that investors were initially concerned that a Democratic or blue sweep could possibly derail or slow down the stimulus. However, the realization that this was unlikely sparked a buying frenzy that has so far extended into the first few days of December. Now, at the moment, there are 2 U.S. Senate seats still up for grabs. If the Democrats win both seats, the Senate will be split 50-50, with Vice President Kamala Harris breaking the tie votes. While this would give Democrats control over the various committees and make Schumer the Senate Majority Leader, it would still be difficult to pass progressive legislation over the objections of moderates. If Republicans win one or both races, then things would be closer to status quo. Nonetheless, there will be some uncertainty on both sides into the new year as election results are finalized. Trump complaining about his results in Georgia may depress or yet encourage Republican turnout, while the anti-Trump anger that fueled Biden's win may not matter for Democrats since Trump is no longer on the ballot. In any case, if polls show both Democrats winning the race in the coming weeks, this could raise concerns about possible legislative changes in 2021. This would likely increase market volatility. Even though the changes will not likely be extreme, we can't expect more than just the status quo. At the moment, the VIX futures curve, which measures expected risk into the future through options volatility pricing, is in normal contango, meaning that there are no signs that the market is pricing this in as added risk. However, if the polls begin to point towards Democrats taking both seats, this could change. The old saying that the stock market climbs a wall of worry is still very evident, given both the political considerations just mentioned, along with the ongoing pandemic-related lockdowns and the yet-to-be-determined timeline for the release of a vaccine. The options market continues to price in a significant level of uncertainty. Now, this kind of market environment is ideal for our option writing strategies, as we sell options for higher premiums in an effort to enhance cash flow. Despite the potential for some volatility in January, in general, we expect the broader U.S. stock market to perform well overall in 2021, and the Canadian market should be able to take advantage of the same opportunities. This is not to say that the markets will go up in a straight line. By now, we all know that they never do. However, given the shape of the political landscape, the unprecedented monetary and fiscal stimulus worldwide, and the hope of returning to some sense of normalcy in 2021, we believe the markets should maintain their upward bias well into the new year. For more insight into our expectations for 2021, please check out our latest blog at www.croftgroup.com. And as we close out the year, I'd like to say thank you to our entire Croft Financial Group team who have remained dedicated and supportive of one another through what has been a challenging year, to say the least. And thank you to our advising partners and investors who have remained committed and confident through the uncertainty of it all. Here's to a better and brighter 2021. Be good to one another, stay safe and healthy, and on behalf of the Croft Financial Group, thanks for watching.